My name is Bond, Treasury Bond. Ka-ching, ladies, and welcome to another episode of Ka-ching Secrets. Today we don't talk about James Bond, although I dressed to impress you, but we are talking about bonds or treasury bonds. So what is a bond? How is it working? What do we have to look for? A bond is basically if a government or a company decides they want to issue a bond and they want to collect some money. Then they are giving out a bond, basically a sheet of paper where they write down, I'm lending from you a certain amount of money, and for this money lending, I'm giving you a certain interest rate. So this is called the bond yield rate or the bond interest rate. And governments, for example, they are doing this to get money that makes them able to, for example, to create a stimulus package, what we have seen recently. So during the last year, the Federal Reserve created 35% of the dollar volume that's in circulation have been created in 2020 through buying some bonds from the governments. And this is very interesting because this affects everything and everyone is looking at the bond yield rate. The bond yield rate is very important. It determines the debt rate, the debt interest rate. So if you're taking a debt on the market from the bank, then the debt rate gets determined by the bond rate. So there are basically two types of bonds, long-term and short-term. Long-term rates, the long-term bonds, they have higher yield rates and lower prices. And the short-term, for example, the 2-year bonds, they have lower interest rate and higher prices. So you're getting less if you're borrowing money to the government, to the Treasury, you are and you're short-oriented, then you get less interest rate. But how is the interest rate determined? So who is saying, okay, today we have an interest rate of this, and tomorrow we have an interest rate of that? The interest rate is built upon an auction. It is a bidding process. So the government, for example, is issuing a bond, and it says, who wants to buy this bond? Make me an offer for the yield. And this auction determines the yield rate, and it determines the price that you have to pay for the bond. So what does it mean? Bottom line, it means if the confidence is high in the market, that means there is less demand for the bonds. So the prices of the bonds drop while the yield rate goes up, and vice versa. So if the confidence is low, then there is more demand, which drives the prices high and brings the yield down. The Federal Reserve can design everything, so they can manipulate the market just by buying and selling bonds. And that's exactly what they are doing now. They are controlling it by buying bonds and selling bonds, mainly buying. So they are just issuing money endlessly. If we have a high growth stock, a high growth company, for example, Tesla or Facebook or Apple as well. So all these tech companies, if we have a high growth tech company, that means high growth is also always connected with high debt. So you're taking up debt to invest it into your expansion, into your growth. And if the cost of the debt, if the interest rate of the debt is too high, that means you have to reduce your debt. You are reducing your growth. And this reduces again the stock prices. So if the yield rate of the bonds go up, then the debt interest rate goes up as well. So it becomes more expensive for a company to take up a loan from the bank. Therefore, they cannot invest that much into the future. Therefore, the valuation of the company is likely to go down. Therefore, the stock prices drop. And so if we see higher yield, bond yield rates, it means we have to switch over to value companies. Value companies have a lower growth rate, and therefore they are safer to invest on higher yield rates. If the yield rate goes down, then the growth companies are good to invest into. Coming back to the inflation, if you're flooding the market with a product, for example, or with money is a product as well. And if you're flooding the product, the market, and you have the same amount of demand, same people who are receiving this product, money, then it's likely it's likely that the inflation is going up. This is just the basic principle of the market. There is an oversupply of money, and therefore it becomes inflationary. But this is not happening right now. We don't see an inflation right now, currently. But I believe that we will see the inflation coming up in the future. And so but the inflation can also be controlled by the Federal Reserve by buying bonds and selling bonds. Very interesting. And what else do we see on the markets currently is that there is a certain synchronicity between the stock market, the precious metals market, the crypto market. They all have dropped at the same point, at the same time, and they also recovered at the same time during the last weeks. And this is very strange, and this implies that they are just manipulating the markets and designing the markets. So you have to keep in your mind that they are designing the markets, they are manipulating the markets, and everything you see on the markets going up and down, and the stock prices and everything else, this is currently artificially. So they are suggesting us the economy is fine, the economy is well, but the contrary is the case. In US, they say they have 8% economical growth for 2021. This is huge. This is more than China. So we have to be very careful, have a big eye on that. And with our MCA strategy that we have at Kaching Secrets, we are really we're good to go, because we're looking for opportunities of fundamentally great companies where the prices of the company, of the stock, is dropping and falling. And then we start buying when it has fallen a certain amount, 20%, we start to buy our first part of this company, and then we keep buying, always hold back a little bit of money. And if you want to know more on this, how this is working, then just go to our website, www.kachingsecrets.com, or join our Facebook group. It's on Facebook, just search for Kaching Secrets Insiders. And I will be happy to, if we meet there, if you have any questions, just drop them into the comments and let us know what is missing for you maybe, or if you have any more questions. So, having said this, now I'm ready to kill the market, because I have the license to kill. So, to kill the market, of course. And I wish you an awesome trading week, an awesome investment week, or investment time. We're having great opportunities ahead. See you on our platforms. Bye-bye and ka-ching! Please be aware, we are no financial advisors. We do not provide any advice. We only share our experience and our results are not typical. If we mention any stocks, funds and other type of investments, it is for educational and illustrational purposes only. Most people are unable to achieve similar results to ours. If you want to achieve similar results, you have to commit yourself to systemize, to learn and to stick to the rules.